Let's welcome in our next guest, Dilip Bhatt, Joint Managing Director at Prabhudas Lilladher. Dilip sir, good morning. Can you just tell us any new mid-cap picks that you have had? You told us Sharda Cropchem, I think it's doubled. Any other new initiation at Prabhudas Lilladher or any other new name that you have found out?
Well, Pankaj, it's something like this, that we are talking about this Jubilant Life Science.
Right.
Though that might not be very new, but still the stock has also corrected from the high of around 425, 450 to the current level of around 315, 320. So I think that's a stock which, if you ask me, I think it has got a potential of being a multi-bagger over next 2 to 3 years. I think that's a stock where you are going to see a good traction in its pharma business going forward. And I think if we were to just take the pharma business alone on a standalone basis, I think the valuation of that should be much more than the market cap of the company. But still, I think considering the various businesses that they are into, I still feel that this company can show a good free cash flow in the coming next 2 to 3 years and sharply improving ROEs. And I think the company at the moment is not going to really, the capital allocation, which has always been an issue with the company, I think now they are very well taking care of it. And I think all the three put together, I feel that Jubilant Life Science on a risk reward basis too, I think the downside is limited, but the upside can be really good.
Jubilant Life, the base in US is very, very small. So any minor approval also can lead to a good growth in the US markets?
Absolutely. I think the US, of course, will continue to be its focus, and I think the acquisitions that they have made, I think should bear a good amount of results in the next 12 to 18 months. And I think that will get reflected because the investment is already done, the capex is already done. Now what we are going to wait for is the results. And even in the existing chemical business, I think after a lot of restructuring, probably they are finding its feet, and that is where also that segment also should start showing a good amount of top line growth and accompanied by a fair amount of bottom line growth. So I think over the next 3 years, on a combined basis, it can be almost about 23-24% compounded CAGR on the PAT basis.
Right. As far as Sharda Cropchem is concerned, I think it's almost given a 50% return from where you had suggested that name. Do you think Sharda Cropchem can do further from here on, or now it is decently valued and earnings will need to come for better growth?
So two things out over there. I think the first run has already happened, and I think certainly it's not cheap, and we are still in the process of trying to understand that company from here on as to how much potential it has. But if one were to take the simple matrix that the company has an ROE of around 22-23% at the moment, and even if it compounds at that 22-23% ROE for next 2 to 3 years, because they have a very asset-light model, they believe in investing a lot in filing in Europe rather than investing in the capex and creating a factory or machinery. So I think that being the model, the ROEs continue to be good, the free cash continues to be good. But if they were to just compound around 20% plus over the next 2 to 3 years on the ROE basis, I think it still can give a reasonably good return. But the caveat, as what I said, is we are still in the process of studying this company. From here on, how much return it can give.
Right. Can you talk about names like DLF? What is your view on DLF, overall realty, or the real estate pack with huge debt? Spectacular rally, but if things were to go right and they were able to reduce their debt and become like an asset-light model, do you think the returns could be phenomenal? Do you like anything over there?
Well, my own take on the reality sector is that apart from the debt problems, I think the problem still continues to be one of selling the units, and I think that is where we are seeing a fair amount of headwinds out over there. So when you talk about DLF, the ticket price is generally very high, so it's not so easy to come by. And even the office space, the commercials have really shown some kind of growth after a long time, but maybe is it adequate? I really do not know at the moment. But coming to all the stocks, I think DLF really stands out because if in that rental piece, if they are really able to raise this money, as what has been reported, as what we understand, I think that will help them to reduce the debt on an overall basis, as also transfer that debt into this the rental business itself. I think then on a standalone basis for DLF, the debt would really come down, and company then would be in a position to generate almost 1,000 to 1,200 crores of cash, which they can use either to reduce the debt further, or they can use to fund their own projects, in the bargain getting a much better price. You know, when you develop a project and sell, or rather than you sell at its early stages, there's always a huge gap. So I think with all these possibilities and company also planning to pump in fresh funds, I think DLF being the leader in that space certainly merits an attention, if not in the short run, because in the short run the stock has really gone up, but I think in the long run, if we talk about 12 to 18 months, and if we buy into this story, and if it really pans out the way we are understanding, I think there's a good money to be made over there.
As far as metals is concerned, Hindalco, Vedanta, a lot of reports coming out, analysis coming out saying that they would make a lot of free cash flows if prices were to remain at this level. They've understood that debt or heavy debt is not the way going ahead, and that's why operational efficiencies plus the change would lead to a better balance sheet. Are you a believer in that? Would you buy these traditional names like Hindalco, Vedanta in the metals pack?
Well, I think this entire pack, Vedanta still appears to be the better of the lot. Of course, Hindustan Zinc also looks good. But as I always say, Pankaj, that these commodities are very difficult to play. You have to be ahead of the curve. You really have to be right in your estimation. But my own view is that on a long-term basis, I still feel that the demand for commodities will continue to remain lackluster. There's still going to be enough production which will be available, which will keep the prices well under check. Unless and until you have a big QE3 happening and there is a global commodity boom, which appears very unlikely in the current scenario. But otherwise, I think purely on a demand-supply basis, I don't think that commodities really can stand out, and more so the Indian manufacturers, where probably the price pressure will always be dictated by the overseas prices. So I would remain little away from this pack, maybe on a short-term basis. If you can really play that, I think one can, but on a longer-term basis, I would still look at some other sectors.
Right. As far as the traditional sectors are concerned, so after the 7th Pay Commission, people have got bullish on names like Havells, names like Voltas, probably Blue Star. Consumer discretionary, even despite the good run-up, would you want to be overweight on that sector?
Pankaj, I think that story has been played out time and again on the expectation of this particular 7th Pay Commission. So once again, when actual disbursement is going to happen, surely we are going to see the pickup. But I think a lot of it is priced in. So I would say that yes, they may give a short-term run, but I think on the long-term basis, I would still be little apprehensive. I will wait for the overall growth in the economy to be really robust, to really buy into a sustainable growth in some of these sectors.
So how would you play the Pay Commission story? Would you play it, via something like a M&M Finance or some NBFC, which is, giving loan to these names which have not done well, or till now has not seen any major returns? Would that be a way to play the consumer story?
As what I said, the consumer story has really been played out, whether it is two-wheelers, whether it is auto, whether it is, the NBFCs which we are talking about, or even about the banking sector to some extent, and of course the consumer durables. So I don't think that I would really play some of these companies based on the Pay Commission. I think each one of them will really need to be, because as what I said, these things have really been priced in to some extent, or I would say to a great extent. Now, a lot also depends upon how monsoon really consolidates. So far it has been so good. So whether that produces a good multiplier impact in the economy, I think that will be the thing which will really give a push to some of these stories rather than the 7th Pay Commission on a standalone basis.
Right. As far as some of the names like Jaiprakash Associates, Unitech, GVK, GMR, all these have seen rallies. Probably not taking names if you don't have coverage. Can you just tell us that companies that are looking to go out and sell assets and then probably can have a better model going ahead once they pay back their debt via these assets? You think that's a play that you would want to do, or you would wait for the sale to take place? You would wait to see the debt reduction, what's left in the business after that, and then probably take a call on such sort of probably corporate action that could come in a lot of companies.
Sure, I think among the names that you mentioned, Jay Prakash seems to be a very aggressive seller of the assets and in turn reducing the debt from its book. But I think very frankly, most of these names which you mentioned are already there in the market trying to sell off the assets, and they've been doing so. Some very few successfully and others still trying. Hopefully if they happen in the next 1 or 2 years, possibly as what we all know, the debt levels will come down. But I wouldn't really play for that story at the moment, because some of these things really needs to be played on a secular longer term basis, whether the intrinsic character of the business is going to change post these. Because this is more based, these are more news driven rather than fundamental driven. So I would really still wait for for it to see whether the character and the intrinsic nature of the business is going to change for better, resulting in fairly good cash flows happening, and also whether the poor ROCs that these people are seeing, whether they can come back to any reasonable level in the short run.
Right. Dilip, thank you so much for taking out time for us. Really short on time, otherwise would have liked to continue this discussion.